90.6%. That is how often the market swept equal highs, the most famous stop-loss level in trading, within 1 week. We measured 1,428 of them across 3 index futures. Every single one in our data, same rules, no cherry picking. Every guru on this platform calls those levels resting liquidity, a pool of orders that pulls price toward your stop like a magnet, and 9 times out of 10 the level breaks. So the gurus were right, except. We also planted 1,427 fake levels. Empty air, random spots, anchored to nothing. Those got swept 90.1% of the time, identical. Whatever is taking out your stop loss, it is not aiming at you. In the next 10 minutes, how we counted, where stops actually survive, measured, and what happened when we coded the famous sweep and reverse trade and let it fire 1,059 times. That last one hurt. Here's how you count stop hunts without fooling yourself. A swing high, by the same definition our backtests have used all series. A candle higher than the 2 on either side. 2 or more swing highs within 0.05% of each other, that's equal highs. The level is the highest of them because that is where the stops actually rest. The clock starts the moment a chart watcher could first call them equal, not a candle sooner. Swept means 1 tick beyond the level within 1 week of bars. We ran it on the Nasdaq, the S&P, and the Dow. 35,674 bars, hourly back to last August, 15 minutes since March. The computer found every equal high and every equal low, 1,428 of them, and watched what happened next. And because counting without a control group is astrology, we built one of those too. Remember the phrase control group, it is the whole video. 90.6%. Within 1 week, 9 out of 10 equal highs and lows got swept. Within a single day, 77.9%. Here's a normal one. Nasdaq, 15-minute, March 11th, 3 equal highs at 25,058. 2 hours after the level forms, a candle punches 122 points through it, and the stops are gone. That is not an unlucky chart. That is the median experience. And before you ask whether every level does this, no. Ordinary swing highs, the lonely ones with no twin, got swept 84.1% of the time. The gap is 6.5 points, our pre-registered bar for a real effect cleared. So at halftime, the score is gurus 2, skeptics 0. Equal highs really do get run more than ordinary structure. The liquidity story is winning. Keep watching. So if the level gets swept, easy fix, right? Park the stop a little farther. We measured that too, and this is the part of the video you can use tomorrow. Of the equal levels that broke, a stop 1/10 of an ATR past the level still got tagged 98.8% of the time. A quarter ATR 95.8, half 88.8. A full ATR past the level on the 15-minute Nasdaq that's about 45 points of buffer still got tagged 74.2% of the time. Because here's the thing nobody shows you. The median sweep is not a wick. It runs 2.1 ATRs past the level. On the Nasdaq 15-minute, the median break ran 75.75 points beyond the highs. There is no clever buffer distance. If your stop lives near a swept level, it is not hiding, it is waiting. Now the control group. For every one of those equal highs, we had the computer invent a fake level. Same market, same side, same distance from price, but placed at a random moment in time, anchored to nothing. No swing, no stops, no liquidity, empty air, 1,427 ghosts. If price is drawn to resting orders, the real levels should get hit more than the empty air. Real equal highs, 90.6. Empty air, 90.1. Half a point. Our pre-registered noise band was 5. We sliced it by distance, near levels, far levels, every bucket, noise, noise, noise. Whatever swept your stops was not aiming at them, because it swept nothing just as hard. And that weird 6.5 gap over ordinary swings, ordinary lonely swings sit where price left and never came back, equal highs form where price keeps returning. The level doesn't attract the market. The market builds the level by coming back and then keeps doing what it was already doing. The stop hunter you're picturing, the sniper reading your order book, the data says lawnmower. It mows the whole yard on schedule. Levels, stops, empty air, all of it. I know what the comments are loading up. The trade was never that levels get touched. The trade is the snapback. Sweep the stops, then reverse. And look, 81.9% of swept equal levels closed back inside within 12 bars. On its own, that sounds like an edge printed in neon. Now the controls. Ordinary swings reclaimed 77.5% of the time. And empty air? 86.5%, the highest of the three. Markets oscillate. Everything that breaks gets revisited, ghosts most of all. Pre-registered verdict, noise. The reversal is real, it's just not yours. But fine, numbers about levels are not numbers about money, so we coded the exact trade the niche teaches. Equal highs get swept. Price closes back below the level. That's your reclaim. Short the close, stop above the sweep extreme, target 2R, conservative scoring, same rules as every video in this series. No discretion, no context, every signal taken. It fired 1,059 times. Win rate, 24.6%. Expectancy, minus 0.26R per trade. Total damage, minus 277.5R. We tried the gentler 1-to-1 version too, minus 0.29 per trade. Worse. Here's March 6th, textbook sweep, textbook reclaim, short at 24,880, stop 45 points up at the sweep high, stopped. Because the sweep extreme is not an extreme, remember the depth chart. The median break keeps going 2 ATRs. Half these trades put a tight stop inside a moving lawnmower. Taken raw, the most taught reversal entry in this niche is a donation schedule. The caveats stay in, all of them. This is one period, 10 months of hourly, 3.5 months of 15-minute, 3 index futures, no Forex, no crypto, yet. It's in sample, cost-free, and our census saw highs swept more than lows because the sample drifted up. We never observed a single resting order. Liquidity was inferred from structure like everyone infers it, and we tested the raw trade. No higher time frame bias, no displacement requirement, no kill zones. Video 5 taught us a single filter can flip a system from negative to positive, so maybe one of those rescues this one. That test is coming. The rules are frozen as of today, files public, hold us to it. What dies today is narrower and it matters. The claim that equal highs are special magnets for price. Against empty air, they are not. Anyone selling you stop hunt protection is selling you a fence against a lawnmower. So what do you do with this on Monday? Stop asking how to hide your stop from a hunter. There is no hunter. Start asking the only question the data answers. Is my invalidation farther than the market's normal reach? Normal reach measured 9 in 10 nearby levels gone within a week. Median break running 2 ATRs past structure. If your stop needs the market to respect a line to survive the week, your stop is the strategy, and now you know its win rate. We can't tell you where to put it. We can tell you the market does not know your stop exists, and it mows on schedule either way. The whole census is free in the Discord. All 5,265 levels, every sweep, every depth, every fade trade, plus the Explorer to slice it yourself. Think our tolerance for equal is wrong? Change it, rerun it, post your number. Best counter-census gets featured. The indicator that marks these levels live is linked below. We test, you decide. And the next time a thumbnail promises you the banks are hunting your $10 stop, you know which group that claim just joined.